Crypto Hotep here with another investing video. We are on week 101 of the Family Portfolio and Dividends Tracker. I really appreciate you guys for tuning in again, and thank you for taking the time out. This is your first time watching these videos. Feel free to go to week number one. Well, first subscribe to the channel, and then go to week number one. That week number one Dividends Tracker and Portfolio Tracker, that will show you couple things. It'll show you the balance on how far we've come with the portfolio, and then it'll show you why I'm doing this. So basically, I gave my family a short list of stocks to choose from and companies they most resonated with. They picked the ones that they most align with, and then we proceed to use M1 Finance as our broker of choice, and you'll see that shortly here why. And then every week we track this portfolio. We track news events, we track buys. We don't really do a lot of sells. So we do a lot of buys, not a lot of sells, dividend activity, portfolio balance, and just how we're feeling about the markets. The videos are for my family first, and hopefully they can make sense to them and, be helpful for them whenever I'm gone. But if they're helpful for you as well, feel free to like, subscribe, comment, share the video with like-minded people such as yourself. But by no means is this financial advice, guys. Okay? But before we go to week 101, we normally do a week review of events that are happening. So this week was pretty volatile, and a couple reasons for that. We had that FOMC meeting. So the Fed did keep the interest rates the same. So they didn't increase it, or they didn't decrease the rate either. So they kept it very neutral at 3.75%. And that was really a nothing burger to the markets. The markets had already priced that in, that nothing was really going to happen. Where the volatility came was markets priced in a potential 75% odds of a 25% base point cut now in May. I don't really know about that, only because the reason why the markets are thinking that is because Kevin Walsh is coming in, hopefully, but the Fed, Jerome Powell, said that if Kevin Walsh isn't confirmed, he will be the temporary Fed chair still. So just keep that in mind. So I don't know about, this 75% odds on the 25 base point cut. I don't know about that just because of that little remark that Jerome Powell gave. NVIDIA has had an AI conference this week that is pretty cool. Usually the AI conferences are really good for crypto too, so good to see this. U.S. economic data besides FOMC, you had PPI coming in cooler than expected. Michigan consumer sentiments, they beat the forecast. I really don't follow those though. And then retail sales showed resilience as well. One of the big things is potential for Middle East de-escalation signals between U.S. and Iran. The reason why they're thinking this is because oil reversed from $72 a barrel to $64.80. I don't know. I think we may hear something next week. There really hasn't been too much on my side regarding this. I think we may hear something next week. Oil has been getting expensive though. I just went to the gas station myself, so I know that this piece is going to drive it. The oil piece is going to drive it a lot here. MicroStrategy added more Bitcoin per usual on the dip, and then tariffs. So Trump administration delayed the April 1st global 10% tariff rollout by 60 days, which is on brand for them. Makes sense a lot. So I think one of the big things I would say, because there isn't really a lot to watch next week, so not a lot. However, one big thing is U.S. and Iran. That's going to be, you may hear a lot of news in the quote-unquote ears may be to the street, especially regarding that, because there's not a lot of news next week. So that could be at the focal point of everything. Okay. Now, before we go to week 101, let's go to week 100. And week 100, it saw us with a balance of $4,019.97, money weighted rate of return of 0.16%, dividends earned of $10.44, and then market gain of negative $4.09. So how did this volatility treat our portfolio this week? So this week, you better believe your eyes there. We are down below 4,000 now, $3,906.99, a negative 2.77% year-to-date money-weighted rate of return, and that equates to a negative $120.03, dividends earned of $11.49. So let's see if we had any activity between this week and last week. So the only activity we really had was we had Google pay out their dividends, 21 cents and 4 cents. And then we had our oldest receive a dividend from McDonald's. Our oldest is the only one that holds McDonald's, and you could see by that dividend payment versus like a Google or a Cintas or a Moody's or anything like that, it's a huge payout in comparison. So $1.61, and then what we did was we just bought $1.61 worth of McDonald's. Okay. When we look at the portfolio, guys, yeah, it looks a little scary, negative 2.77%. But as always, when in doubt, zoom out. So let's see, 1 year before, our 1 year return is a positive $16.50%. So again, whenever these come about where the markets are very uncertain, they're very volatile, and that you could be in a dip, always look back to where you've come, because that'll put the big picture, in the right frame for you. So bottom to top, let's go to our portfolio. So with our middle has a balance of $559.37. The only one with a positive money weighted rate of return of 1.68%, dividends earned of $1.79, and then market gain of $7.15. Okay, now that's, and our middle has a 1 year return of 16.41%, right? So again, you got to zoom out. With our middle, we have Target, Costco, and Starbucks carrying their weight per usual. And then the tech stocks, Amazon, Google, Sony, and Tesla, unfortunately, these are all bleeding out as of right now. We've been here before, and we've done this before, guys. So, feel free to go to some of my older videos where we went on like month stretches of just negative gains month after month. This is nothing for us. So going to our youngest has $561.33 in balance, negative 3.61%. Money weighted rate of return equates to a market gain of $21.42, and then dividends earned of $1.06. Let's see the 1 year return. 1 year return was 8.92%, which is not bad. But very similar to our middle, Starbucks and Costco holding up the weight here. Very long established companies, and then tech is the one bleeding out. Apple, Sony, Tesla. See the trend here? So again, those speculative and tech stocks, they're great when they're great, right? But when everything just falls loose, those are the first things to sell off, and those sell-offs hurt the most with the tech stocks and speculative stocks. Let's go to my wife's stocks. My wife has a balance of $570.71, money weighted rate of return of a negative 5.26%, market gain of a negative $32.33, and dividends earned of $1.60. Her 1 year return, though, is a positive 34.39%. That's a fantastic return. You can't beat that, right? But again, zoom out, see where we've come. We've come a long way. But very tech heavy here with Google, Microsoft, and then Tesla, and then the speculative stock, you can say, is Celsius. All 1, 2, 3, 4 of these are bleeding out currently, but Pepsi, the long-standing name and brand that it is, carrying the portfolio at positive 7.47%. Okay, let's go to our oldest. Our oldest has a balance, and it is our oldest birthday as well. So happy birthday! And we've said the pleasantries and said the happy birthdays, and we're gonna do the celebration tomorrow. So, but our oldest has a balance of $1,101.51. money weighted rate of return of a negative 2.33%, market gain of a negative $28.11, and dividends earned of $2.33. So with that being said, let's go to the 1 year. The 1 year is over 18%, 18.46%. Again, a very great return. But let's keep it on the year to date. Year to date, Apple down over 8%, Costco down over 13%, McDonald's, where we got that dividend payment from, up over 1.5%, and then Tesla down over 15, almost 15.5%. Last but not least, let's go to mine. I have a balance of $1,114.07, a negative 3.58% money weighted rate of return, equates to a negative $45.32, and dividends earned of $4.71. So with me, there's no surprise here. Tech bleeding out, we know that. It's Microsoft and Google here. Finance, though, is also bleeding out very heavily. So Visa and Moody's down, both down over 14%. Do I feel another way about Moody's and Visa? Not at all. I think these are fantastic companies, and I'll be happy to buy the dip on them all day long. Real estate, which is old realty, up over 12%. It's holding down the portfolio. And then industrials and energy, which is waste management and Cintas, they're playing off one another here. So, obviously waste management is doing a lot better than Cintas, so it's kind of carrying the weight here. Consumer staples and shopping. Again, we have Costco, and then we have Lowe's. Very similar situation like with waste management and Cintas, right? So that's why, diversification in that realm can help. When you have one stock that's not doing well and one that can make up for it, it really helps out the portfolio and it balances out. But you don't want to be over diversified where you're just inking out maybe a 5% gain or return on your portfolio, and you're not beating the S&P 500. That doesn't make any sense. So you don't want to be over diversified in the sense that you have too many stocks. And that's why I slimmed down my portfolio to, I believe I only have 11 holdings as of right now, and I'm not adding any more until I hit a specific gate in my portfolio balance. For our restaurants and food, Coca-Cola holding down the portfolio. But again, Domino's Pizza still bleeding out from before, down over 9.5% here. Okay. And guys, honestly, with my portfolio, I'm not in pharmaceuticals, the last one, that's AbbVie. I'm still not very concerned with this. We've been through tough times before with our portfolio, but we don't do adjustments. We don't, tinker with anything. We literally keep our process the same, day in, day out, week in, week out, which is, and the process is, we've already picked the companies that we want to invest in, right? We believe in those companies long term. They have a long-standing operational history, and they know what they're doing. So what are we going to do? We're just going to fund the account so we can buy those great companies that we think are great at fair prices or even cheap prices. And right now, everything's looking a lot cheap, okay? So that if I can provide any advice, it's, again, understand what you are investing in. This will make these times right now very good, instead of saying, oh, the stock market is a scam, everybody's losing money, see, I told you we're going to lose money. That goes out the window when you actually read and you can understand what you're investing in and you believe in it. And you can say, oh, great, Tesla's down right now. I believe in the vision of Elon Musk. He's gonna launch SpaceX or go IPO with SpaceX next year. Tesla might be a good play. Again, not financial advice, but again, when you start thinking of this, it makes the investing process so much easier. And when you have a longer time horizon as well, that makes investing even easier as well. So for week 101, guys, we had a balance of $3,906.99. Yes, we were down with a negative 2.77% money weighted rate of return, market gain of a negative $120.03, a dividends earned of $11.49. If this video is helpful, guys, feel free to like, subscribe, comment. Let me know what you think. Reshare the video, show some support, guys, and let me know what you're investing in too. And as always, thank you and happy investing, guys.